What's going on, everybody? Yes, yes, yes. This is Drew from Up Top, and today I'm making this video um, on support and resistance. Right, so this video is going to be about how I find support and resistance, how I like to trade support and resistance, and how I find levels when I am trading support and resistance. I am a support resistance trader, and I also like to trade trends. So we'll definitely be getting into that. So let's get right into it. So first things first, right, is I like to see the market. I see the market as is always in one of four ways. It's always trading in one of four ways, right? And these ways that I see the market would be: one, in a range; two is in an uptrend; three is in a downtrend; and then four is ambiguously. And that basically meaning that it can be interpreted in a bunch of different ways. So when it's ambiguous, I'm not trading it. I like to trade clear trends. The trend is your friend. So I like to see pullbacks and bounces off of support, rejects off of resistance, or breakouts. So I'm going to jump right in to, so first, let's look at some examples of ambiguous uptrend and downtrend, right? So I'm looking at SPY right now on the hourly chart, right? And so when I'm looking for a support and resistance range, now keep in mind these can be horizontally, diagonally. It doesn't have to be just horizontal, right? So when I'm looking for these, right, I'm gonna get my trend line tool out, and I'm looking for common highs and common lows, right? So see right here how we have, the same high right here, almost the same high, same high, same high. So this is a solid resistance level here. Now keep in mind that this level here doesn't have to be exact. The market is not perfect and never will be. So you gotta understand that you gotta have an eye for seeing these common highs and common lows. As long as they're common, it's decent. And this little break above is just all this is a fake out, right? And then the ways you avoid that is you don't trade breakouts on low value. Even though this was pre-market, so you wouldn't have to do this anyway. But just to give you an example, right? So now we find a series of common highs. We're gonna look for a series of common lows. So I get my trend line tool out again, and then boom, right here I see one low, two low, three lows here, right? So we draw this out. Boom. Now, given when you find these levels, you're not going to see, forward what's happening. You know what I mean? You're going to see what's happening here. Ideally, I like to see these trends have ideally three touches, right? So you see here, 1, 2, 3 touches here. So I can call this a significant resistance, right? So now I know that whenever the prices get up to this level, I should watch for a reject or a breakout. And the way that I can determine what's going to happen here is I just go down to the lower time frames. This is hourly here, but you can go down to the 15-minute, 5-minute, 3-minute. And then I like to see what the price is doing at that level. Like here, you see we look like we was going to break out. We got rising volume down here, and we did break out briefly. This resistance level is 417, and we broke out. This candle closed at 417.44. So this is considered a breakout with the rising value. But for confirmation, you always want to wait for another candle or two. And this did this right at close. So it would have been a risky trade anyway, trying to take a breakout at close. Because next day, anything can happen. So this is a perfect example of resistance and support, right? We got multiple touches of resistance, multiple touches of support. Or near multiple touches, right? So this is a range. So when the market is doing this, it's in a range. So meaning it's just in consolidation, right? A lot of people don't like playing ranges, but I do. I just like to take the support bounces or the reject of resistances or the breakouts or the breakdowns. Now, trading ranges has done me good in my years of trading. But the real money is made on breakouts or breakdowns, right? You can see here we broke this support with rising volume. This is very key for playing breakouts. You need to see rising volume. You see we broke here with rising volume, and then we never looked back. I mean, we broke at 406, and then 2 days later we were at 373. Now, if you would have swung some puts here, and then put your stop loss a little above the support. So say we would have put our stop loss at 47.52. I like to put my stop loss a little bit above of a support or resistance retest. That way we don't get faked out, because sometimes prices may come back up, break above, and you would think it's coming back up, but it's going to reject. And the market just does that. It fakes people out. So we could have had a stop loss here at 47.5. And then we would have swung puts and we would have caught a nasty move. And this is well over 200% move. I mean, broke at 406. 2 days later, we're at 373. That's over a $30 move. So you would have made crazy money there. So yeah, this is an example of trading in a range, support and resistance. Another way the market trades is in a downtrend. Downtrends, you can make a lot of money on puts because stuff falls a lot faster than it rises. There's a saying that they say stocks take the stairs up and the elevator down, and it's very true. You can see we got a break here and we went crazy, but we tend to climb a lot slower than we fall. So same concept for finding support and resistance diagonally. Which I like to trade those as well. Trade trends, right? So you want to find a common series of highs, right? So I got my trend line tool out here, and let's say I find this high right here, right? And then I draw this down because it looks like these will connect, and it does, right? So boom. So now we know we have a clear downtrend here, right? So we want to trade the trend. So meaning that we'll just wait at this trend line. Every time we get up here, we can take puts if we hold. We must hold below. So you see here, we came up. You took puts here, you would have ate. We came up again, you took puts here, you would have ate. And then we got the breakout here. So yeah, so then the series of coming lows should be very similar. It's not gonna be identical. It's not gonna be perfect. But you may get like some wicks out of it, some candles out of it, and that's okay. But I like my charts to be pretty clean, so I look for setups like this, right? So here we have a downtrend channel here, right? So if you want, you can play calls on the bounces of support, but ideally I don't like to take calls, on a falling stock. I like to wait for it to pull back up and then take puts. But you can play calls if you are, if you catch it at extreme low or something, you can take calls and swing them, day trade them, however you want to do it. So yeah, same thing with the horizontal support and resistance is you could play the rejects of the resistance or the bounce of support here. But for the high percentages plays, you're going to take a breakout, right? So you can see, we zoom in here on this day. We got a nice bull candle here, and we broke the trend. This is the first time that we broke this trend here. Remember I said I like to see 2 or 3 touches of resistance for it to be solidified, right? So here we got 1, 2, 3, 4 touches. So this is a solidified resistance, right? Solidified downtrend. So now we know we have to just wait at this level here to see if we're going to come up and reject or break again. So we would have been waiting here, and we would have seen that we had this bull candle right here with rising volume. We got significantly higher value than the previous sessions here. So this is a confirmed breakout. So we could enter on calls here, or we can let it break and then come back down. Because a lot of times stocks tend to break out and then they come back and retest that breakout, right? And that retest is just confirmation, right? So ideally, I like to see the retest, and I'll be very comfortable taking calls here. See, if we would have took calls here, even though the market was closed at this hour right here, we could have took calls here, and then we could have rolled it up to our next resistance, which would be this next high right here, around this area here where we broke structure. So we're coming back to test this area right here, right? So this 407 area would have been our target. So we got in at 396 here, and then we rolled calls up with a stop loss right under our entry, right? So say our stop loss would have been 395 right here, and we pulled back, but we held that stop loss, and then we went up, and we would have took profits at our target here. Now the next target would have been any key levels, any psych levels, like the 400 level, or moving averages. A lot of time we break out and come up or come down to moving averages. Let's see if we have any here. No, yeah, we don't have any that are to the upside. So yeah, this would have been a very textbook trade, very clean trade. You would have been in this trade very comfortable. We never really came down to the stop loss, and you would have been able to hold this right all the way until the first target here at the 407. So this would have been over a $10 move in one day. In one day you would have caught this. So this is why these are my favorite things to trade. Always keep in mind the trend is your friend, right? When we break trend, this is the trend right here. When we break trend, significant moves usually happen if we hold. So we went over range trading, which was this support resistance here. We went over downtrend trading, which is this downtrend channel here. Now we're gonna look for a uptrend, which I already have one drawn out here. And you can see, remember, we want 2 or 3 touches of support or resistance to be valid. Right here we got 1, 2, 3, 4, 5. We got 5 touches here before we got another visit up that line there. So this is a perfect example of uptrend. So if you want to do it as a channel, you just find a series of common highs, which is these highs here. You can draw your trend line over that. Like I said before, it's not going to be ideal sometimes. You may not come up all the way in touch. You may reject a little bit before, or you may break a little bit above, but this one is pretty clean. We only got about 2 touches of resistance. But this is a very clear uptrend. We're making higher highs here, higher highs, and we're making higher lows. So this is a clear uptrend. And then all we got to do is just wait at this support or wait at this resistance. At resistance, we can short it. At support, we can buy calls, right? But I like to trade trend breaks, right? So once we got the break of structure here, and this was pre-market, once we got the break of structure here, we could enter in puts or wait for the confirmation of the retest, right? You see we broke, came down, came up again, retested it, tried to reclaim this level, but we couldn't. And you see the wick there showing that sellers are here, right? And you look at the volume down here, you see we got rising bearish volume. So this confirms the breakout, and you can swing puts right here if you want. And just like before, our entries would be any previous support, right? So I can see like right here, we have a level here at 424. We have a level here at 423. And then we have a level down here. This is a clean level right here, 419. This is clean because we got multiple touches here. Bounce, a bunch of rejects here. And then you can see when we broke, we shot straight down to this level here. So this is the power of support and resistance, and finding these levels will help you to get in trades and stay in trades until those levels. So let's delete that. Oh, well, another thing I want to point out is look at this, how this shows how key this level was right here, this 419, 420. We came right down to that, broke, retested, right, fell, and then came up, retested that same level here before another drop down. And even here, we created a mini uptrend here. You can see this trend line here, multiple touches of support, break of trend here with rising volume. It's key for breakouts and breakdowns right here. And then we continue down. So very, very textbook on SPY. I love trading SPY. I trade SPY almost every day because it moves very, very textbook at times. And if you're able to find these levels, it does you pretty good, especially if you're patient. So we went over trading in a range, which is right here, downtrend, and then uptrend, right? So the last way that I see the market trading is ambiguous, right? So let's see if we can find okay, like right here. right here, I would say this is trading ambiguously, right? It's kind of in an uptrend, but then it's kind of in a downtrend. Is ranging on a big scale. It's not very clear to me, right? So I wouldn't trade this because I don't have any key support or resistances that in this area that I can use to help me make a decision when I'm trying to enter in a trade. So yeah, this is the perfect example here. So again, we have trading in the range, we have a downtrend here, we have an uptrend, and then we have our ambiguous zone right here that we don't want to touch it right here because it can go either way. So let's take that off. Yeah. So another thing to know is that, especially when trading in a range, support tends to become resistance, and resistance tends to become support. So you can see here, before this range right here even became a range, we rejected the support that it came into, right? And look back here, we rejected that same support right here. It's around that 406, 407 level, right? So this is a perfect example of support becomes resistance and resistance becomes support. And this is ideal for catching a breakout. A lot of times we might break out here and then we would, a lot of times we see stuff like this. We'll break out and then we'll come back, test that same level before the big push down. And that's why, a lot of times waiting for that confirmation retest is very key because it lets you know that, all right, look, this level was key right here and I'm about to head down. All right, so let's see if I can find a better example of that. Okay, here. We have another small range here, and forgive me for all these lines. I trade spot every day, so I always got it marked up. Let me take some of these off so y'all can see pretty clear. Okay, cool. So nice range right here, right? Multiple touches of resistance, multiple touches of support. We are in nice consolidation here, right? This is getting ready to break to the upside or break to the downside. Now, given we had a strong push down here, this is just consolidation. This was just consolidation for a continuation move down, but this can come and reverse to the upside. It's likely. That's why you gotta watch the candlesticks and watch the lower time frames to see what's happening. But I pulled this up to show that, we got a confirmed break here of this trend with rising volume, rising bearish volume, and we came up and we retested. Now note how we came up and we broke back in almost all the way up the range, and then we fell. So this is just a fake out, and this happens a lot. So that's why, and it's nothing that you can control. Say our stop loss would have been a little above the support here at 392. We came up here after the break, and we didn't hit the stop loss, but then the next session we hit our stop loss, we would have got stopped out. And it's unfortunate, but that's just the nature of the market. You can't predict everything that's going to happen. You know what I'm saying? You're not always just going to win. You're going to have losses. That's why you can have a trading plan, to keep you from losing a lot of money. So, yeah, we broke back into the range here, and then we did end up breaking again on low volume, and then crash. So this is an example of, the market is not always perfect because we broke on high volume here, but we pulled back into the range, middle of the range, and then broke on low volume. So this is a trade that I wouldn't have took because I don't like that we broke on low volume. And then the next candle was on high volume, but it showed a nasty wick, like the buyers were holding this level. So this was a trade that I wouldn't have taken. Excuse me. Cool. So we went over ambiguous ranges, we went over uptrends, we went over downtrends, and we went over range trading. Okay, so to reiterate, we want to see two or three or more touches of these support resistances for it to be valid. If you got this one touch, it's not valid because it's not an established trend, right? You can't say that's an established trend. So you want to wait, be patient, and see if we revisit that support resistance again and again to see if it's solid. A lot of times when you have multiple touches like you do here, it solidified that level even more. So you see here we have 1, 2, 3, 4, 5 touches, right? So we know this is a pretty strong level. So we know when we come here again, we should break or bounce nasty. And you see we did get a break and we failed. We broke at 425 and fell to a low of 410, a 15-point move. Yeah, and this is how SPY trades most of the time. It does these ranges, it does these downtrends, uptrends, and then it breaks trends, and then it creates a new direction. You see, even here we can find another trend, another uptrend, where we got like 3 touches. We got 3 touches here, and we would have sat here waiting for the retest, and then you see we got the nasty break, and then the fall into a consolidation phase, where we then continue down. Another thing to point out is that it's crazy, but a lot of times, right, whenever we get at these supports or resistances, there tends to be news that follows right after we are at this level, or when we are at this level, that'll send it flying. A lot of times, like, we have economical data or like earnings, or just news on the company or whatever that will help it. It'll serve as a catalyst and push the prices up or push prices down. So that's something to look out for. I love trading support. I love trading resistance because we have clear levels of where we can enter, and all we have to do is wait for a bounce, break, or reject of those levels. I don't want to make this video too long, but I will be doing more videos of entries, exits, how I find targets, and everything like that. I just want to do this quick support resistance video so everyone can start to chart on their own, and find these levels and catch these big percentages plays, man. Remember to keep in mind that the trend is your friend, and you want multiple touches, right? You want more than 2 or 3 touches of these trend lines, of these support resistances for it to be solidified. So yeah, thank you for your time, and stay tuned for more charting videos.